Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you as always for coming on the program.
Good afternoon, Devin.
Well, let's start with the U.S. market opening back up on Tuesday after Christmas, and it was a bit of a mix. Tech shares on the Nasdaq were off almost 1.4%. Tesla, a big story, with another decline of more than 11%, making it the year's worst performing large cap tech company. What's the story in the global equity markets?
U.S. stock indexes finished mixed after China said it would open its borders next month, which bolsters investors' hopes that the thawing of the world's second largest economy will support global economic growth. On Tuesday, the week's first trading session after the holiday, S&P 500 fell 0.4%, and the tech-focused Nasdaq slid 1.4%, while the Dow Jones Industrial Average added 0.1%. China has maintained some of the world's most restrictive coronavirus lockdown measures, slowing its economy significantly. Plans to lift COVID-19 quarantine requirements on international arrivals early in January could boost China's economy as travel resumes. Still, COVID-19 is spreading rapidly in China as the country reopens, prompting reports of overcrowded hospitals and inundated crematoriums. Investors are weighing the impact of the outbreak with what the reopening will mean for the global economy and financial market over the long term. Tesla stock dropped by 69% for this year, related to Elon Musk's unexpected massive sales of stocks and controversial speeches.
Right, and this volatility on Wall Street sent Korean stocks to lower today as well. All the big names lower, especially those in the battery sector. LG Energy Solution down more than 4.5%. Samsung SDI almost 3.5%. Tell us about the Korean market.
Domestic markets all dropped today in a larger scale after two straight trading days rise until yesterday. As the year's end comes close, next year's unexpected economic downturn is weighed on the market. All institutions, including Korean government, expects next year's economic growth would be cut down to 1% level. And all major trading partners of Korean economy, like China, U.S., and EU region, will also turn down seriously next year. The benchmark Kospi retreated 2.2%, and Kosdaq also dropped 1.7% today. In Kospi market, both of foreign investors and institutional investors net sold the stocks up to 1,131 billion won. This is almost doubles normal days trading size. All the 20 largest market cap stocks dropped seriously today, except Samsung Biologics. Samsung Electronics lost 2.6%, and the second largest market cap, LG Energy Solution, dropped 4.5% today.
Well, zooming out a bit, Professor, with China reopening and Japan looking to possibly tighten its monetary policy, currencies in Asia are regaining strength. The exchange rate for the Korean won is now below 12.70 to the dollar. What do you see happening with currencies at the moment?
First of all, it is not possible to forecast the $1 exchange rate in the short run by economic knowledges. But I would say $1 exchange rate will fluctuate in a range of 1,251 per dollar and 1,301 per dollar until the first quarter of next year. The most prominent factor in foreign exchange market is Bank of Japan's base interest rate hikes. As Japan's yen intensifies, U.S. dollar weakens, and then Korean won appreciates with lower $1 exchange rates. Bank of Japan decided to allow its 10-year Japanese government bond yields to move 50 basis points either side of its 0% target, up from 25 basis points previously. The decision is being read as a sign of testing the water for potential withdrawal of zero interest rate policy. But Bank of Japan will hike its key interest rate more when Chairman Kuroda resigns next year, April. Also, China provides more ups and downs in $1 exchange rate. China has really gone full force into abandoning zero COVID, but there are both of hopes and concerns on Chinese economic recovery.
Right, we are at an interesting juncture here. Finally, Professor, the Bank of Korea in its December report is consumer inflation for the year ahead at 3.8%. Expectations for inflation among consumers are now below 4% for the first time since June. Where do you see inflation going in the new year?
Inflation expectations, which is consumers' expectations of inflation for the next year, fell to 3% level in 6 months as raw material prices such as international oil price fell and the $1 exchange rate stabilized below 1,301 per dollar. Expectations for a slowing upward price trend grew. According to the result of the Consumer Trend Survey by Bank of Korea, inflation expectations for December were posted at 3.8%, which has been decreased by 0.4% from previous month. Inflation expectation hit a record high of 4.7% in July this year and have remained in the 4% level for 5 straight months. It is the first time since June that the inflation expectation fell to 3% range. So this is additional evidence that Korean inflation already passed its historical peak in the third quarter of this year. However, it is unclear whether such downward pressure on prices will continue as electricity and gas rates are expected to rise next year.
Right, that will keep the pressure on prices to go up. But Professor, we'll have to leave it there for today. Thank you as always for coming on the program. We appreciate your insights.
Thank you very much, Devin.